Play-to-earn gaming can only be profitable if there is a constant inflow of new money from new investors, or in a insidious case, if the development team is able to extract more and more money from their existing customers. I'm talking all about this controversial opinion in today's video. Hey everyone, and welcome back. This is the Part-Time Economist, and in keeping with the Halloween theme of the video, I wanted to do something spooky and scary, specifically talking about the dark side of play-to-earn gaming. My theory that it can only be profitable if people are willing to keep shoveling money into the game. I realize this kind of goes against the whole we're all gonna make it bro mentality and can be controversial. So I will lay out my arguments, my theories in the video, and if I've missed something, you're more than welcome to leave it in the comments so that I can reconsider. But before we get started, I do have to say, number one, this is not financial advice. Do not make any kind of decisions based on what I tell you in the video. Number two, these opinions are strictly my own. They don't reflect any other companies or businesses. And number three, despite what I say in the video, I do play-to-earn games. I think they are a very cool concept of getting paid for something that you enjoy doing, something that is fun for you. But as much as I like them and as cool as I think the concept is, there are some serious economic realities underneath the surface that I don't think we can just skim by and pretend they don't exist. So with that being said, my key claim, my number one assertion in this video, play-to-earn gaming is only profitable to the extent that it has increasing buy-in either from external investors or if the development team can kind of extract more and more money from their existing players. I will argue that this is an inherent feature of play-to-earn and not corruption or anything like that on the part of a specific team. If you're new to this whole concept, I will briefly explain play-to-earn, what it is. We will review some basic economics, supply and demand, and then we will apply those theories to play-to-earn. So first off, what is play-to-earn? Play-to-earn is essentially leveraging the power of cryptocurrency, blockchain technology, and NFTs to allow you to earn real-world value for playing a game. Like I said, a very cool concept. There are countless play-to-earn games out there. Each of them is going to operate slightly differently, but the general model is you purchase in-game assets from the team, you complete some kind of a task or play a game or win a match, and then you get cryptocurrency as a reward, which again is pretty cool. Just to give an example, you see the screenshot here. This is a mining game. I have some mining tools. These are NFTs, assets that I own that generate a small stream of cryptocurrency every time that I use them. Now, before we go further, I want to make a distinction. Some people are playing these games just to play them. It's their entertainment budget. If you're just playing for fun, you like the gameplay, this video does not apply whatsoever. We're specifically looking at people that view this as an investment, kind of focusing on the earn portion of play-to-earn gaming. If you're focused on earning, you can do this in one of two ways. Number one, the assets that you own. In my case, it was the mining tools. If those go up in value, it's kind of like a capital appreciation thing. Also, the incoming stream, that continual payment from mining the cryptocurrency or winning matches, however the game is set up, that's your second way of earning. I want to address both of these because I think regardless of which one we look at, the only way you profit is if someone else buys into the game. So let's look at assets first because they're the most easy to understand intuitively. The price of any asset, I don't care about stocks, I don't care about bonds, I don't care about, NFTs, cryptocurrency, wheat, it doesn't matter. The only way the price goes up is if someone is willing to buy. There are more buyers than there are sellers, they bid up the price. I want to be very clear, partnerships do not increase price. Having a well-known streamer cover your project does not increase price. Tech modernization does not increase price. Land and pack sales do not increase price. These may be checkpoints, right? They may be driving factors that cause people to purchase your assets, but at the end of the day, it's not the game itself or how great it is that causes the price to go up. It's the fact that people are willing to buy those assets. I think that makes intuitive sense there. Basic economics. Now, not only can your assets go up in price, but you also earn a continual stream of tokens. And people will say, hey, I don't care if these assets go up. I buy them once, and then these tokens, I get them on a continual basis. Now, we have to ask ourselves, these tokens, what can they buy? It's not like owning a stock where they pay you a cash dividend. That cash dividend, you can go buy groceries. These tokens that you earn, what can they be used for? Well, unless you trade them on an exchange, in which case someone is still buying into the ecosystem, they can only be used internally in the game to buy, generally, NFTs, which are valuable because they generate tokens, which are valuable because they buy NFTs. So you have this kind of cyclical economy in which you purchase these NFTs to generate tokens that buy NFTs that generate tokens. So it's kind of a circular flow of value there. And you might say, you have missed something because I can take these tokens and sell them on an external exchange. Well, if you're doing that, that means by definition, someone is putting up dollars, Ethereum, Bitcoin for those tokens. So someone is still buying into the game. Someone is still investing into the game. So again, I think my proposition holds, whether it's the NFTs or the coins themselves, they can only go up in value with increased investment into the project. Now, this doesn't really apply to gambling games because I put up $5, you put up $5, the winner takes it all. Totally different model. Most play-to-earn games don't work like that. But again, even such, they're considered gambling. So, play-to-earn gaming is generally based on an inflationary reward model. I don't win at your expense. We all get some rewards. If I lose a match, right, I don't have to give up more money. I just don't earn anything. So, if I win, I earn. If I don't win, I don't lose. So by definition, the rewards are inflationary. We know that anything that is inflationary generally has that downward price pressure, absent increased demand. So the only way your assets, especially if they're inflationary, can increase is with that increased demand. So let me summarize my argument. Like I said, I'm not an expert. It's my opinion. If I missed a premise or something doesn't make sense, totally open to reconsidering, but I think it's pretty solid. Number one, for prices of any asset to increase, there must be a buyer. Standard economics there. Inflation of assets leads to a decreased price. So even if we have a game with constant demand, the fact that those cryptocurrencies are constantly being issued and emitted, the price tends to go down, right? Even if we have constant demand. It's even worse if demand decreases, but by definition, even to have a stable price, we need that demand to go up. Earnings in non-gambling P2E games are inherently inflationary. Absent that increased external demand, inflation pushes prices downwards. I was a little bit dramatic here saying it pushes prices towards zero. However, infinite inflation pushes us towards zero. Most P2E games aren't infinitely inflationary, but on a long enough time horizon, right, they're going to issue more packs. They're going to issue more coins, right? They have to, because if they just do one pack sale, then they're out of money, right? So they have to continually issue more. You might say, oh, well, there's only 1,000 of this NFT issued. Yes, but the game will issue a different NFT that you need at some point in the future. So both the assets and the crypto are generally inflationary. So you have to have continued external demand. These new investors, they invest to make a profit, which means the assumption of further new players. So let's assume that I purchase into the game. I'm an early investor. I go up 5x on my investment. Someone says, wow, this person made 5x. They buy in. That's good for me. I've offloaded my assets at a higher price point. The only way their assets go up is if someone later on down the line buys in at a higher price point. I think, again, I don't see any way around that. So I actually want to give a couple examples of real games and how this plays out. Because when we're in a bull market, a lot of this stuff isn't really noticed. And I didn't really notice a lot of this because a lot of your prices, your assets are going up because external people are purchasing into this, right? You don't really see the dark side of play to earn until it's a bear market, because then you don't have increased demand. You have these assets that are increasing supply, and the developers, they say, oh my goodness, these assets are going down, rewards are going down. we've got to do something. So what they do is they have to continually extract more value from their existing player base. And I will give you a couple examples. One game that I played, you got assets, cryptocurrency that accrued on a daily basis. You could claim it weekly, monthly. It would just add up. At some point they said, hey, that doesn't work anymore. You've got to claim it every day or we're going to burn those excess rewards. So you bought into the game with these NFTs that said, hey, they're going to continually accrue rewards. And now the team's saying, well, we're nerfing your rewards, right? Because not everyone's going to log in every day, especially when that wasn't the original agreement. So they're nerfing those rewards, trying to make the rewards that people do claim more valuable. Another one, this one really gets to me. Again, I'm not naming any projects here, but essentially when I first started playing, you had to get a $10 access pass, and they said, hey, after you get this access pass, go wild. Whatever matches you win, you're going to get rewards for those. So it was really cool. I played, I earned a lot of rewards, and then they said, okay, we know you bought this $10 access pass, and you were doing really good. But in order to compete at the higher levels, we want to see that you have a wide collection of assets into the game. You need to buy into the game. So now, even though I was winning these matches with the $10 access pass, they're saying, hey, if you want these rewards, you've got to buy in, right? We need more money from you. And then time went on. They said, well, now some of these cards that, you bought this $10 access pass and we gave you access to kind of some starter cards. But yeah, those don't count for rewards. So even if you win your match, we're going to dock you points for using those starter cards that you got as a result of your $10 access pass. Okay, fine, I'll go buy those cards. And then they say, well, all right, here's the deal. We have bots in the ecosystem. And even though you own all your cards, we need you to play with like a level 2 or a 3 card. We need you to burn a couple cards together so that, we can see that you're buying into the game, and it'll prevent bots, right? So now you had a $10 investment and you were earning rewards. Now you've got to buy all these additional cards, right? And at first I'm like, man, this is kind of like shady. But the more I thought about it, I realized this is inherent in play to earn. I don't know that there's a way around this, because if you don't have external investors coming into the game itself, they're continuously issuing new crypto, pushing price down. They're continuously issuing new cards, right? Because they have new pack sales, new NFT sales. So in the face of constant issuance, even to keep those rewards constant, they have to increase demand. They have to get you to buy more into the game. And I just don't see a way around that, right? As this notion of blockchain being immutable and decentralized, that doesn't really make a lot of sense to me, but I understand it from an economic perspective. So just kind of an overview of what I consider to be the dark side of play to earn. Like I said, I still play to earn, but I think it's important to consider those economic realities. Like I said, if I miss something, if there's something that I overlooked, I'm happy to have someone point it out in the comments, but at this point, I just don't see a way around it. The game has to continually issue new packs, new NFTs, right? So they have to get you to buy their old NFTs. I just don't see a way around it. But as always, thanks for watching the video. I hope you found it useful, and I'll see you next time.